a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hey everyone, Eric Dutram here for Zacks.com, coming to you with the best stock and ETF to watch this week. This week, every investor needs to be watching out for the Brexit vote in Great Britain on Thursday. This is going to be a huge issue for the country. They might possibly be leaving the EU, and that could impact a lot of stocks and even the ETF tracking the main market over there. The top one to look at is EWU. This ETF is from iShares, easily the most popular fund tracking the market. And if we look to recent charts, we can see how the shift in the Brexit vote and the polling has really been impacting this fund as of late. If we look to this 6-month chart, we can see that EWU versus the S&P 500, pretty much it's been 1-to-1 correlation here to start 2016. But once we rolled into March and into the summer months here, we can see a bit of a divergence, and especially in this last month and a half, and that's really largely thanks to new polling on the Brexit vote. Some investors were worried Britain was going to leave, and that's largely what we saw this big drop even a couple weeks ago. And then just Friday and Monday, we've seen a nice surge back here, and that's largely thanks to new polling, which shows that Britain might actually stay in the EU. So this is especially important for the country at large, but it's a particular issue for the financial sector. London is often seen as kind of a financial hub and a gateway to the rest of Europe, so this sector could be very impacted if Britain actually does vote to leave the EU. If we look to some of the recent charts here, we can see that financials are actually the biggest single holding for EWU. They make up about 20% of the portfolio. Consumer staples and energy both make up a decent chunk as well. But financials are really the main driver for this ETF, and that's why we've seen this ETF largely move as a result of recent polling information. And now it does look like Britain will probably stay in the EU, so that's why we've seen a bit of a surge back here. Now, if investors are looking for a stock instead, one company to look at in particular is Ryanair. Now, this company might be based in Ireland, but they actually do more than a third of their flights, a third of their passengers go in and out of British airports between Britain and the rest of the EU. So the company is very much impacted by these trends, and we can see a similar chart if we look to Ryanair over the last couple months. Same thing with the last 6 months here. Now, granted, Ryanair, along with a lot of other airlines, is also impacted by shifts in oil prices, but we can see a similar issue here where over the last month and a half, big bout of volatility. We've seen the company go from a 10% loss to a 2% gain, and then back to its 10% loss. Now, granted, the company is up a bit in Monday trading here, and we've seen a kind of a snapback, but it's a huge shift for the company. Their CEO, Michael O'Leary, has called the EU an evil empire in the past, but now he's putting stuff on the planes to try and encourage passengers to stay in the EU. So, it's kind of a big shift for the company, and it could have a very big impact on this stock. As we can see, though, Ryanair has actually had a great track record over these last 5 months. If we look to this price and consensus chart, we can see the company has gone from about $26 a share 4 or 5 years ago, and shares have come up into the $75 range. A lot of volatility in this level, even though earnings estimates have been on the rise. A lot of this recent trading has really been a direct result of fears over this Brexit vote, and that's why this company is looking a little more promising heading into the vote on Thursday. Well, that's all the time we have for this week. Tune in again next Monday for a new stock and ETF to watch. And for Zacks.com, I'm Eric Dutram.